All right, so I'm going to go out on a limb here and say that one of the most underrated products, well, tools that real estate investors or wholesalers, even real estate agents really should understand and know is the entire loan amortization process. Like being able to be creative with the loan side of things for either your client or for yourself if you're an investor trying to purchase. For example, I use it multiple times a day. If we are trying to run numbers on a property, for example, we'll say a single family house that we are going to purchase, we'll say $200,000. And if I know that today's interest rates are 7%, we'll say, they're a little bit lower than that, but we'll say 7%, then I have this cool little calculator I'm going to show everybody that you go in, you type in 200,000, you enter the interest rate to be 7%, and then you can choose the loan period, whether that be 30 years, 15 years, 20 years, 25 years. And it kind of tells you what the monthly payment's going to be just on the mortgage alone, not including the taxes or insurance or anything like that. It's strictly just the loan product. So what I like about it is we can kind of get creative with potential seller financing terms. We know down to the wire, literally the month of 18 years out in July, what our payment's going to be, what our interest is going to be that month, how much the loan has been paid down. It's a cheat code, guys. It really is. And we have bought apartment complexes this way. We've bought small multifamily this way. We've negotiated single family houses this way with seller finance. And it's pretty cool. So I'm going to jump in and just show you my little calculator. I'll put a link in the description on how you can get this calculator. But it's built in Excel and it's pretty cool. It comes with a lot of other things as well. I have a fix and flip calculator that's built in as well. I have a repair estimate calculator that's all in this cool Excel sheet. An Airbnb analysis, a long-term rental analysis, even a midterm rental analysis. If you guys know what like Furnish Finder or Traveling Nurses, those are all kind of midterm rentals. Let's get into the calculator. All right, so this is my calculator. I don't know how detailed you're going to be able to see it in the video, but all this random stuff that I have over here are some properties that we're actually working on. 115 Cleveland, we're actually under contract now and going to be buying that creatively as well. But let me just show you guys and gals how to use this calculator and why it's kind of important. So in the example I said 200,000, so I'll just continue to roll with 200,000, and you can ignore this stuff over here. Actually, I am just going to go ahead and delete it just so it doesn't confuse anybody. Same with this down here, you don't need it. All right, so I'll come back. So 200,000, interest rate 7%, loan period. This is years. So usually for a single family house, the average is 30 years. So we'll say 30 years. Start date of the loan. Obviously, I've had this calculator for a while. We'll say 1/1/2025. All right, so 200,000 at 7% with 30 years amortization. Your monthly payment for the mortgage loan and interest is going to be $1,330.60. And that is for the scenario here. Now, why is that so important? Is if I am negotiating a seller finance offer with someone who is willing to be the bank. Essentially, it's what seller finance is. The owner of the house is taking monthly payments, sometimes with interest, sometimes without interest, believe it or not. And what makes this so important is if they want 200,000 for their house, but the house is only worth maybe 125,000 actually on the market, they're asking way too much for their house, and that's why they probably haven't had any success of actually selling their house. And it's either sitting on the market with a realtor just wasting away until they become, more brought back to reality that their house isn't worth 200,000. But how we get a little bit creative is we can give them that $200,000 number, but we're not going to be giving them today's market rate of 7% interest, because if their house is worth 125,000, they're basically already getting $75,000 in interest already as it is, right? So why would I want to give them 7% interest over that? And actually, in the 30 years, they're making $279,000 in interest over that 30 years. Not too bad of a deal if you're a younger person and see yourself living for more than 30 years. Not too shabby. So if we know this isn't a good deal at $200,000 for 7%, and let me get even a little bit more into detail in this scenario. So let's say that the rental rates in this area are $1,600. Kind of reasonable, not too bad. So if we have rents going for $1,600, and that's our mortgage payment, not including property taxes and insurance. I mean, this isn't a deal. It's not going to cash flow to where we want to be, if it even cash flows at all. So $269.40 is what it cash flows. Well, it doesn't cash flow. Well, let's just stop saying it cash flows. That's how much money it is without paying your taxes and insurance, basically. Insurance would definitely eat that up pretty quickly, and depending on the area, property tax would probably eat that up as well very quickly. So to make this a deal, how we get seller finance offers accepted is we don't give them 7% of today's market rates. We're going to give them, we want to give them zero if it's going to be $75,000 over what the market value is of the house already. But let's just say, simplicity's sakes, we'll give them 2% interest. Okay, that takes our monthly payment down to $739.24. You take taxes, insurance, we'll say $250 for both those combined monthly, with vacancy, maintenance, repairs. You're probably going to cash flow $250-ish probably a month on this deal. It's not a bad deal, but what we would want is it to be an appreciated market. Basically, we want it to see the values continue to rise in the neighborhood. We probably wouldn't buy this deal, not at $200,000. We'd probably try and talk them down to, let's say, $165, because that's still almost $40,000 over what the market value was, anyways, in this scenario. And we'd still want to give them 2%, and that brings it to $609. And yeah, the numbers look better that way. But what I like about the calculator here that I built is, and this is what differs between a lot of the online calculators that you see, that like Zillow, and I think Realtor.com even has a calculator, but now they charge for it, which is hilarious. And then I've seen a few other amortization calculators too that are now paid apps. And it's like, all right, well, you know what? Screw it. I'm going to build my own. But what differs between this and all those other apps that even before the paid ones is this right here where it says loan period in years. Those apps, and even Zillow and Realtor.com, they have set years because they're only using specific loan products. So they have like 30 year, 25, 20, 15. This, it doesn't matter. You can enter any number right there and it'll calculate it for you. So we've negotiated a couple 40-year loans. So we can put 40 there. Wow, look at that. Monthly payments getting good, cash flow is getting better, right? But it's very rare to negotiate these, because who wants to hold a loan for 40 years? Why would they? But let's do this instead. Let's say, okay, we want a 40-year amortization, 2%, 165. But now we could even come up a little bit. We'll say you know what, let's go back up to the $200,000 scenario. And it's still a pretty good deal, and they're getting $200,000. Pretty good, right? One thing that we could do with an offer like this is we could offer a balloon payment. We'll say this right here is boxed out because it's a 5-year balloon, 60 months, and that'd be 182,000. We don't want to do a balloon in 5 years if the value's only going to be 182,000, because you're not going to be able to refinance into a loan product because you're still paying way over what the house is even worth anyways. So that's just one thing that we do here to find out where a good balloon would be. I think that really covers the gist of this calculator. You can see some of my other tabs down here that come with the calculator, Airbnb analysis, all these. And I'll do other videos on how this calculator works, those other tabs, but I just want to start with this one because I think this is the most crucial if you're trying to figure out if you're going to buy a good deal or not, because you need this as the staple for making sure that it is a good Airbnb, if it is a good apartment complex, if it is a good duplex, if it is a good triplex, you get the deal. Thanks for watching, guys. If you got any questions, hit me up, comment below. You can follow me on Instagram at Brandon Thomas Official, and I will put links to everything we talked about down in the description. Thanks for watching.